Hi everyone, welcome to the Mighty Trades channel. My name is Johar and welcome to another episode of the Weekend Technical Analysis series. So it's been the last couple of weeks have been very tough for the market, but we need to still carry on with our trading discipline. So let's not waste any more time and let's dive right into it. So last week we concluded our episode with IGL. So let's move forward to SRTRANSFIN. So this is a weekly chart that we are looking at here, and as you can clearly see, SRTRANSFIN has broken down this support. This was the play. This was the support price where it was consolidating since December, and that was decisively broken in last week, and this week we saw it fall even further. So now there are two places where I'll be interested in this chart. The first place is here. If the stock breaks this high and goes up, then I know, or then we can be certain to certain extent that the stock has turned bullish again. And if not, then I would be interested in buying the stock somewhere around this price zone. If the price corrects all the way till here, then this is a good zone to maybe do to take a position for a short to medium term and hold the stock for probably this target, this previous support zone, somewhere around here. So we'll have to see what chart pattern develops, if any, when it hits this price. But this is the two places where I would be interested in buying the stock. So with the market being in this corrective phase right now, we need to sort of change our strategy a little bit. We can't just stick to one narrative that if the price crosses over here, then I'll go long. We also have to look at what price can the stock reach to from where it can potentially reverse. So I believe this stock could potentially correct till here. If it does not, if it bounces back from here itself and goes up, then we can go long. But if it continues falling down till here, and then depending on what the market conditions are at that time, we'll have to see what sort of technical chart pattern is forming, what sort of resistances are forming here, and then we can probably take a position at this zone and go long only up till here. So this would be a good 20-25% gain in a short time frame. So that's the analysis on SRTRANSFIN. Moving over to Dickson Technologies, Dickson has also again corrected. This zone should potentially act as a strong support for the stock, because this it built a nice base last year for a good 3-4 months when it was consolidating here. It made this cup with handle pattern, broke out, achieved that target, and now it's correcting back here. So this looks like a nice support for the stock, but with the commodity inflation that's happening across the globe, Dickson Technologies margins will get impacted because of that. And all the semiconductor shortage and all is also still there. So I don't think this stock is going to turn bullish anytime soon. So I don't see any reason that we should be building a position in Dickson Technologies at this time. Moving on to Relaxo. Relaxo has also corrected quite a bit from its top. Let's see. So this has corrected by about 20%, close to 20%. Hopefully it should take support at this zone. This seems like a nice support zone for the stock, because it has a significant base here last year. For a good couple of months it consolidated in this price. So let's see what happens in Relaxo. There is no indication of any bullishness right now. Again, to diversify our strategy a little bit, if this price, if this support zone is broken, then I would be interested in buying the stock somewhere in this zone. And depending as to what the technicals tell us at that time, then we can potentially take a trade up till here, which is a good, I think, percentage point away. From here to here is again a good 24-25%. So let's see what happens in Relaxo. Moving on to AU Small Finance Bank, it's very volatile, but it is definitely doing, I think, a little better than the market, right? Because this is sort of like a support trend line that it's following. This is more like a channel that it's been trading in. Yeah, this is the channel in which the price has been consolidating. So let's see if this channel is broken, then you can see a further correction over here. If not, if this channel if it continues consolidating in this channel, then you can maybe buy this at the bottom of the channel and sell it at the top of the channel and keep doing that. But let's see how the stock behaves. But it does look like it's sort of outperforming Nifty because it's still maintaining this channel pattern. It's not broken that yet. The correction has not been as deep. Now let's move to Bharat Forge. Uh, Bharat Forge in a deep corrective phase again. So one thing that I've noticed is that most of the stocks have come down to, like, the previous basis. So if that is the case, and if stocks stop correcting further on from here, then I think the market could potentially be stabilized at the zone where it is right now. It might not move up much, but as long as the stocks don't break these major support levels which they have built last year, then I think we should be in a good place. But yes, right now, no bullishness in the stock. We have to wait for the price to show some momentum, which currently is not visible on the chart. Moving on to Petronet. Oof, Petronet is in a serious downtrend since a very long time. I mean, just look at this chart. It's not done nothing. Nifty has gone from the pre-COVID high of 12,000 to 18,000 plus, while this stock has not even broken its pre-COVID high. Its pre-COVID high was what? Over here, if you look here, the pre-COVID high in Jan 2020 was 276 rupees. The stock has not even broken there. So clearly, this chart is in a downtrend. No momentum whatsoever. Moving on to KANSAINER. Okay, so this is a paint company with the crude oil prices hovering at $100 plus. This is going to affect their margins terribly right now. So paint stocks we have to avoid, and you can clearly see it's corrected by a massive 33-35%. Hopefully this price zone should act as a support. This has been a base for it since the last 5-6 years now. Um, so let's see what happens. But paint stocks we have to stay away from. As long as crude is above $100, that's not a good idea to stay in paint stocks. Dr. LALPATHLAB is in a deep correction. The entire pharma space has not been performing for a very long time. This is corrected by 43%. Wow, this is not a good sign. Um, if anyone already has it, then they should potentially wait now if you didn't exit it before, because this should ideally act as a support. You might get a momentary bounce and then you can exit, but as of now there is zero bullishness in the stock. Moving over to Power Finance Corporation. Okay, this is also consolidating in a range since years. I mean, let's look at the monthly chart for this. Yeah, this is in a consolidating in a single range since years now. So from a trading perspective, if it comes down to the bottom at around 70-80 rupees, then that would be a good time to buy, and then you can probably hold it for like 6 months, 1 year, and you could potentially make how much? If it comes to back to the top of the range, you could potentially make 100%. So let's wait for it to come down to the bottom of this range. Right now there is no investing opportunity as such. If it comes to the bottom, you can take a position, wait for 1 year, 1.5 year, and you could potentially double your money. So that's the view on PFC. Moving on to overall reality. Okay, let me switch over back to the weekly chart here. So overall reality hasn't corrected as much as the market. That's a good sign. It looks like no one is really in a huge hurry to sell off their stocks. However, it has corrected by 18%. So as of now, there is no bullishness as such. This is a strong, this it needs to stay above this price of 800 rupees, which was the previous support. And if this support is broken, then we can see a deeper correction. But right now, there is no reason to take a position until and unless it breaks out from this downward trend line, because the price is trying to go up, but obviously it's being sold off into, it's like on a it's currently like a sell on rise market. Every time the price goes up, someone is trying to sell and get out. So right now we have to stay cautious and avoid the stock. MRF, very expensive. I have never personally traded in MRF because it's just out of my budget, but clearly it's in a downtrend. Crude oil is a major factor in producing tires as well. So definitely this is not a good sign for a company like MRF as well. So tire stocks, paint stocks, anything that is heavily dependent on oil as a raw material is not going to perform well in this market. Moving to NHPC, again, no momentum, has been consolidating in a range since years. Better to stay away from this kind of stock. ZEEL has corrected deeply, but I would really be interested in building a position in ZEEL if I get it at this price zone, somewhere here between between 180 and 200 rupees. Then I think it makes sense to go into ZEEL, because with this Sony merger, I think there could potentially be some big things happening for ZEEL in the future. So if the price does come here and if there is some bullish reversal sign that we can observe, then definitely it would be a good time to add ZEEL at that time. But we'll have to see what happens in the chart and what fundamental changes are happening at this price point. We won't just blindly buy it if it comes here. We'll wait for some bullish momentum to come into the stock, and only then we will enter. IDFC First Bank has been in a downtrend since its listing. It looked like it was going to go and do wonders last year, back in Jan, Feb, March, when it was trading above 50 rupees, which was a very big resistance for it. So if you look here, this price was a massive resistance for the IDFC stock, and when it broke out, it shot up and gave a move of how many points? Let's see here. It gave a return of close to 40% to its investors, but since then it's been in a correction phase, and there's currently no bullish momentum in this stock whatsoever. So it needs to break out of this downward trend line, and then we can probably see some bullishness in the stock. So that's the view on IDFC First Bank. Moving on to Aditya Billah Capital. Oh, has been consolidating since a very long time in this range. As you can clearly see, this consolidation has been happening since February of last year. So this is almost a year-long consolidation in this range itself. So let's see, right now there seems to be no bullishness whatsoever. If it breaks this support zone, or this low of this range, then you can see a deeper correction down till 80, 85 levels. So right now it's better to avoid this stock. Moving on to IRFC, clear downtrend, nothing to discuss here. TVS Motors, again, auto sector is going to come under pressure because of the commodity cycle. So right now it doesn't look like a good trading opportunity. So it's better to avoid the auto stocks right now. And I think the only auto stocks that will do well are the stocks which are into electric vehicles, because with this increase in crude oil, one realization that economies and people and investors will have across the world is that because of these global supply chains and because of the future uncertainty with Russia, it's not going to be easy to remove these sanctions. If Russia tomorrow declares that uh, fine, we are going away from Ukraine, it's not like all the countries will just forget about what happened and just remove all the sanctions and things will go back to normal. That's not the case. There will be some tough stances taken by Western governments. And I think this will bring a big realization globally that we need to switch to electric vehicles faster so that we can not be dependent on oil as much as we are right now. So I think this will increase renewable energy resources. The use of renewable energy resources will be increased. So batteries will be produced more, and I think car makers who quickly pivot to electric vehicles will stand to benefit a lot from this. So that's the view on TVS Motors. Currently, no trading opportunity here. Let's move over to GlaxoSmithKline. Again, trading in a range since years, right? I mean, this high was made back in August 2015, and then it's just been trading there itself. So nothing to look at here. Union Bank, again, this is a PSU stock. PSU banks have been doing very well compared to private sector banks. But right now, again, with everything that's happening in the market, this has also corrected quite a bit. It's corrected by 20%. If you were to get this stock here, somewhere here in this zone, near 30, 35, then this would be a good investment bet. And let me show you why. If we go over to Screener and check out Union Bank of India, the book value of this stock is 94 rupees. So this has very deep undervaluation inside it. Right now also, if you look at the current price is 40 rupees and the book value is 94 rupees. So that is telling you that the bank actually has more assets than what it's currently valued at. So it would make a nice deep value buy if you were to get it at this price, and you could potentially hold it till the book value. Because I believe the PSU banks, if you look at the long term structure, if you look at the monthly chart, just look at the high of Union Bank, it was 425. And then after that, all these NPAs problems happened, this Nirav Modi issue, Vijay Mallya issue, and the PSU banks got a very, very bad name. And then they went into a deep correction. But I think all the PSU sector banks bottomed out in the COVID crash, and I think they have made a solid base. And if you look at these volume bars also, this amount of volume has never been observed in any of in this stock. So clearly a lot of accumulation has happened at this zone of 30, 35 rupees, where big players have entered and built positions here. So I believe if you get it at this price, it's a good idea to buy it and hold it up till the book value at least. So that's the view on Union Bank. So we'll revisit the stock next time when we do our weekend technical analysis, and we'll see what the price levels are. Now moving on to Loris Labs. Okay, let me switch over to the weekly chart. Yeah, clear downtrend, nothing to discuss here. Although it has been making a base over here since October, so definitely there is some inherent strength compared to the market. It's not correcting like the rest of the market because it has already corrected deeply in October last year. So and after that correction, it's been sort of building a base. So you could potentially take a trade if this high is broken here. It looks like it's making an ascending triangle at the bottom. So if this high is broken, this price of 556, then we can take a potential trade. Let me add this to the tracker. This looks like a good opportunity. So Lotus Labs. I think I've made an error in the spelling. Let me just copy it from here. Okay, there we go. So the date identified is today, 5th March. The current price is 536.65. So what we have noticed is potential ascending triangle. Okay. Now normally the target in these cases is the bottom of the triangle and the top. And if we take this up here, so then This is the first target that we can potentially get. So 19, that's a 19% gain. And the target entry price, we will keep it as 55558 is the target entry price. The target will be 667 as the first target. So the potential gain is 19.53. Our stop loss in this case would be I think I would like to keep a very tight stop loss since markets are not really doing that well right now. How much of a loss is this? Let me just calculate that. 542. Yeah, so this would be a pretty tight stop loss that I would keep here. This is the current price. All right. Let me just also add the chart link. Okay. Right. So if any of you are following this sheet, you can just click the link to this chart and it will open up directly the observation that I have made here. So you will be able to see the chart the way I see it. Okay, moving on to the next chart, which is 3M India. Deep correction, also has been trading in this range only since years. If you were to get it at this price, maybe somewhere around 19,000, that would be a good time to buy it for the upper boundary of this range. So this looks like the range that it's been trading in for quite some time. It broke out of this range for a couple of weeks here, but then it corrected and was consolidating here at the bottom. I think it was making a sort of head and shoulder pattern in the making. So you can see here, this was a left shoulder, this was the head, and this was the right shoulder, I believe, in construction. But then this whole war happened, and then it's just corrected massively. So let's see what happens if someone is lucky enough to get it here, then they could potentially buy it for a bounce back up to the top of this range, which will make it a 40% gain. All right. So this obviously we will have to see what sort of technical indications we get when it comes to this price. So unless there is a sign of bullishness from this price, we will not buy it. We'll have to wait and watch. Just because it came here doesn't mean we buy it. It's a wait and watch game right now. Moving on to Supreme Industries. Okay. So it is at a support zone. This zone is definitely a support. Let's switch over to the daily chart a little bit. So this price should act as a support, and if you look at the 200-day moving average, sorry, here. So the price is currently below 200-day moving average, and if it breaks this low, this support, then we are in for a deeper correction. So right now it's just a wait and watch game. There is no trading opportunity at all. The only sign of bullishness will come if and when it breaks this downward trend line and it gives a close above its previous swing high, which would be somewhere around here. Only then we can be sure that there is some indication of bullishness back in this stock. Otherwise, it's just wait and watch. Moving on to GMR Infrastructure. I think this stock was the talk of the town last year because if you look at the monthly chart, it had broken out of this resistance at rupees 25, which was a resistance that was built back in what 2014. And after that, it gave a massive up move, and then it broke out of this resistance of 37 rupees, and it gave a up move beyond that also. Now, one good thing is that this previous resistance of 37 rupees is acting as a strong support for the price right now. So as long as it does not correct beyond this price, I think the stock will show a further run up, because this price was broken out after when? After 2014. So there's a 8-year long consolidation behind this whole breakout. So that's not a small amount of time. There are investors who have probably been waiting for 8, 9, 10 years to make some money out of this. So they are not going to leave this opportunity so soon. So let's see how the price behaves. Right now, it looks like it's taking support over here at this zone, and maybe it could, move up again. So let me add this to my tracker, because potentially the target that you can get out of this is very simple calculation. We will take the depth of this fall all the way to the top, and if you put it up here, you can potentially see this stock go up till 65 rupees, which is a gain of 75% from the current market price. However, because we are not sure of the current market situation because of the whole Ukraine Russia war, we would need a very, very strong indicator that the stock has turned bullish. And for me, I would only turn bullish in the stock if the price gives a close above 44 rupees. So according to that, then if we look at a long and short position here, there we go. So if we take this and we keep this as our target, so we get a 48% gain, and my stop loss in this zone would be, let's switch over to the weekly chart for a minute here. Okay. Yeah, this looks like a decent stop loss, 40 rupees. So this would be the stop loss. So I'm going to add this to my positions. I think it might just take support at this zone, but obviously we will only enter into the stock if we get a close above 44 rupees. So the price that we saw it at was 37.30, multi-year breakout. Let's quickly take a look at the financials before we add it to our tracker. Okay, so ROC is bad. There's no PE. Book value is in minus. So none of these things are good. If you look at the sales are okay. Company has been making significant losses. Let's look at the profit and loss numbers. So the sales are pretty much the same. Again, not making any profit whatsoever. Borrowings are again the same. They went down momentarily back in 2017-18, but those have gone up again. And if you look at the shareholding pattern, the promoters are holding a good amount of shares. FIIs are continuously buying here. This is interesting. They have been buyers in this stock since September 2020. So they are constantly buying. The DIIs are closing the positions, and in the public you have, oh okay, there is Junjunwala Rakesh was here for a while. He seems to have exited his holding. Kuwait Investment Authority is not here. Who is this? This is LIC is still in the game. And you have GKK Capital Markets, which is also in the game. So fundamentally, the company is very weak. Technically, there is a lot of strength, but because fundamentally the company is not great, we will not add this to our positions, because for a very simple reason is that I want to have uh, a peaceful sleep in the night, and I don't want to take undue risk in the market. There is already a lot of risk associated just trading in a stock, and that risk is just amplified when you trade in a stock which is fundamentally weak. So better to avoid this kind of trade. It's okay. There are a lot of opportunities in the market. Good stocks have corrected quite a bit, so you can make a lot of money in them. You don't need to trade in stocks where it is unnecessary. So let's move on to the other IPCA Labs. IPCA Labs mein, wow, this volume is interesting here, which we see in the month of November, but it is in a downtrend. Let me just quickly take a look at the fundamentals of the stock. Oh, ROC is 30. That is very nice. Let's see here. Debt to equity is also very low. That's good. Okay. Let's look at the fundamentals. Sales are good. Operating profit margin is also good. Went down a little bit in the last quarter. Net profit is also superb. If you look at the yearly results, then the sales are highest ever of the trailing 12 months, and the profits are also highest, close to highest ever in the trailing 12 months. If we look at the shareholding pattern, then FIIs have reduced their stake by 6%. Not a great sign, but on the flip side, the domestic institutions have bought by another 5%. Public holding has gone up by around 2%. Let's see if there are any big holders here. No big investors. And FIIs, no big FII is here. If you look at the domestic institutions, then let's see what's happening here. Okay. So domestic institutions are definitely holding. ICICI has increased their position by more than 1%. UTI has added some money. Kotak has bought 1% shares. So definitely there is good institutional interest in this stock. If we look at the technicals, it is currently trading at all-time high right now. There's no technical chart pattern that I can see here. This price should ideally act as a support for the stock, this whole zone. And any indication of bullishness would only come if the price closes above 110 rupees. As for a target, what target would be there after this, I'm not sure. We'll have to see what chart pattern develops on the chart. It could make a left shoulder, a head, and a right shoulder, and then we could be able to calculate maybe a target. But as of now, there is no bullishness in the stock, so we'll have to wait for it to give a closing above 1100, and then we can see what happens. So that's the view on IPCA Labs. Good fundamentally good strong company trading at a good support level here. Let's see if it manages to take support or no. Moving on to Crompton Greaves. Again, this is a Nifty consumption play. Makes electronics. These companies will also be affected because of the inflation. Currently, it should ideally take support here. It has already taken support once in February. Let's see if this support continues to hold up or no. If it does not, one potential chart pattern that I see developing here is it could make a head and shoulder, a bearish head and shoulder. So let me open up my brush here, and this looks like the left shoulder. This would be the head, and this could potentially be the right shoulder in the making. And if that does happen, and if we consider this zone to be our neckline, then the potential downside that we can see in this chart could be pretty deep. So let's have a look at this. So yeah, we could potentially see a significant correction in this stock. So better to stay away right now. Let it give a close above 446, and then we can be safely assured that the downtrend has ended. So two prices in this to give a close above. The first price is 419, but I would still not be sure above 419. I would only be sure if it give a closing above 446. All right, moving on to Schaeffler India. Oh wow. So Schaeffler India looks very strong compared to the rest of the market. Definitely strong. It is consolidating. If you move over to the weekly chart, we can clearly see that it has been consolidating in this price range since quite some time already. So we'll have to wait for a breakdown or a breakout to happen to get a clear understanding. But right now it's just consolidating in a range. So there's not much to do here. Let it either give a breakout or breakdown. Let's see what technical chart pattern develops. Only then we can understand what's happening. One trend I can see here is this looks like a pretty strong support trend line. So you could potentially see the stock coming up to this level, and if it does, it would make a decent buy for the top of the range for like a short term 18-20% gain. But that's currently the scenario on Schaeffler India. So very strong stock. If anyone already has it, should continue holding it. And your stop loss would definitely be the bottom of this range. So 1607 should be your stop loss. Hatson Agro is correcting, consolidating here, taking support at this price. So that's a good thing. This should be, this whole zone should act as a support. No bullishness as of now. It's in a corrective phase. We need to see it breaking out of this trend line, and then we can potentially see some bullishness back in the stock. But it is trading at a good support level. Hopefully, it should survive the fall further on. If you look at Trident, nope, it is in a downtrend right now. If you look at the daily chart here, sorry, well, let's put some moving averages here. So the price is currently taking support at the 100-day moving average, but it's too risky. This is an upper circuit, lower circuit stock. Better to stay away from risky stocks right now. Currently, there's no indication of any bullishness in the chart. Let's move over to Atul. Again, nothing happening here. It made a high on October 21, then it went back up and tested this high in Jan. It's correcting again. I think it's made a double top pattern here. So you could potentially see a further correction if this support is not held up. This entire zone should act as a support. If this zone is violated, then you can see a fall all the way till 7,000 rupees easily. If you look at Torrent Power, deep correction, currently taking support here. With energy stocks moving up, you could potentially see a bounce in the chart from this price zone up till its all-time high levels. So you could keep it in your tracker. I am personally trying to keep my positions as light as possible. So right now I don't see any indication of bullishness. If it were to bounce from here because of the price in energy stocks, you could potentially make a 25% gain. But I don't like this chart structure. There's nothing I can see. I mean, this fall is very deep, very steep fall it has gone through it. It's literally showing like a desperation of people wanting to get out. And that is sort of putting me off from the chart, you know. I mean, this just look at the size of this candle. In 1 week, it fell by 15%. This is a huge bearish candle. It's taken out all the gains of so many weeks in one single week itself. So it's not looking that great. If you look at Gujarat Fluorochemicals, very nice, very strong. If we try and create a support trend line, then this is the sort of support that it's been taking multiple times. We can see it goes up, huge correction, goes up, again correction, huge up move here of 20%, and then a down move of 15%, took support, moved up. So it's still in a strong territory. Let's look at a shorter time frame, the daily chart. So it is taking support here, and it would not be a bad idea to maybe buy it at the support trend line, or if it does come to the support trend line and it breaks above 2700, so you could potentially take a trade for this target. So that's one short-term trading opportunity that you see here. But again, I don't believe in taking such short-term trades until and unless they are very short, like just 1 week, 2 weeks at the max. Otherwise, I try and avoid these kind of trades. So that's the view on Gujarat Fluorochemicals. Clean Science has corrected quite a bit. There's nothing much on the chart right now. Also, last week it tried to engulf this bearish candle by creating a bullish candle, but it was not able to stay above this level and it came back down again. There is no chart pattern that I can see here, plus the chart is very limited, so better to avoid this stock right now. Rec Limited. So Rec Limited has been consolidating in this range for a very long time. So there is zero indication of bullishness. However, this is a good stock from an investment point of view, because there's a lot of deep value which is there in Rec Limited. If I show you guys the fundamentals of this company, then just look at the P. It's trading at a P of 2.5, which is horribly low. And if you look at the fundamentals of this company, you will realize just how much deep value this company has. In March 2010, the sales of this company was 6,600 crores. In March 2021, the company closed the year with 35,000 crores in sales. If you look at the net profit, it was 2,000 crores, and last year the net profit was 8,300 crores. Now let's look at the share price. This high was created back in 2010, which is 185 rupees. And at that time, the net profit was 2,200 crores. Now the profits have improved by 4 times, right? The profit now is at 8,000 crores, and if you look at the trailing 12 months, then it's showing 10,000 crores in profit. So 5 times the profits have gone up, but the share price is still available at a price where it was trading back in 2010. So just look at the growth of the company. There is massive consolidation happening in this range, but believe me, when this stock will break out of this consolidation, I think there will be huge move in this stock, and I think it can double or triple your money in a very short time. So if you are a long-term investor, this is an extremely good stock to be added to your portfolio. And if it corrects further, I think you can add more. You can add some quantity right now, and if it corrects further, you should continue adding more to the stock, only if you are a long-term investor. Plus, this is a government company, so they do give good dividends, so you will make money with dividends as well. So that was the view on Rec Limited. So no short-term trading opportunity per se, but if you're a long-term investor, then this is a good option for you guys. All right, moving on to CG Power. CG Power, along with other power companies, has not corrected as much as everything else in the market. It is forming a base over here. It reminds me a lot of JSW Energy. So there could potentially be a nice bullish momentum in this stock if it gives a closing above this trend line. What would the targets be? I'm not sure as of now, but power companies are going to do extremely well. That's the view on CG Power. If anyone already has it, then the stop loss that I would suggest is this price right here, 158 rupees. I would give the closing below this. Please exit your position, in my opinion. That's just my opinion. JK Cement, again, all cement stocks are also correcting because of the commodity inflation. There's a lot of power that is required to generate cement, and if energy prices go up, it is going to affect their margins. So it's better to stay away from cement companies right now. Humans India has been consolidating in a range since 2015 and has been consolidating in this price range for the better part of a year now. No bullishness as of now in the stock, but it is on an upward trajectory, because if you see all the lows are constantly going up. So that is one good sign here. Hopefully, we can see some sort of a bullishness if it gives a decisive close above this 1,000 rupees. Then you could potentially see a big move, and the first target definitely looks like the all-time high of 17.75%. Let's look at the monthly chart here to understand what we could experience here. If it does give a close above this, then the next target would automatically become 2,158. Let's go and see the financials to see if this valuation would be supported or not. Okay, so what does Cubans India actually do? It is a part of USA, manufactures, distributes, services diesel and alternative fuel engines from 2.8 to 95 liters diesel, alternative fuel powered generators. Okay, so it's in power generation. That's a good thing. And it also provides components for the automobile sector, I guess. Creates engines and stuff. All right, so interesting business. Let's look at the sales. Sales are have improved a little bit, but otherwise they're pretty much flat. Good thing is the margins are still intact. That is good. If we look at the longer term time frame, then the sales haven't really moved much. I mean, in 2011 they were doing 4,000 crores worth of sales. In 2021 they did again 4,300 crores worth of sales. So not a big move. This could potentially be because automobile companies have reduced their manufacturing because of the semiconductor shortage. Um, but otherwise, the business is stable. It's generating good profits, and it's generating good sales also. If we look at the shareholding pattern, then FIIs are definitely accumulating this stock. So you can see that their holding was at 9% back in December 2020. That's gone up to close to 11%, then moved up to 11.7, then increased further close to 12%, and now it's at 12.54%. So this is a good encouraging sign. The domestic institutions have reduced their position slightly, but it's largely the same. Public holding has again largely been the same itself. And even in public holding, you have State Bank of India, which has actually increased their position from 1.3 to 1.53. So that's also a good sign. So definitely an interesting chart setup. Um, yeah, this really looks actually pretty good, and there is good accumulation, good volume happening um, over here in this chart. So let's try and see what opportunity we can find here. Okay, if we look at the weekly chart, so we can clearly see that it's creating some sort of a pennant or a triangle sort of formation, and this consolidation is getting tighter, right? So a breakout is, I believe, overdue anytime. So here is what I'll do. Okay, so this is the long position. My stop loss in this case will be again extremely tight, and I will hold the stock first for the first target. The first target is its all-time high. This will be the first target, and if it breaks above the all-time high, then my target will move up to sure, which would be a gain of close to 76%. So we need to keep a nice tight stop loss in this case. Um, in fact, you know what? Right now the market is so volatile. I would rather not take the risk of taking a trade at this zone. I would rather be happier taking the risk if the price gives a closing above its uh, all-time high. So we'll have to see. So we'll have to wait and see if the price gives a close first above this price line. So first thing, it needs to break out of this pennant formation. Then it needs to give a strong close above 1098, which is this resistance zone. And once it does, then this will potentially become my stop loss for the larger trade. So this is a 11% loss, and if it gives a breakout above this zone, then I can take a trade for a 76% gain with a 11% of potential loss. And this ideally should act as a very strong support because there's a lot of accumulation that has happened on this price point. So let's add this to our tracker to keep a track. So let's see, Cummins India, copy this. Let me also add the chart link. All right, the date today is 5th March. The price that we see right now is 949.70. All right, so there is a pennant slash triangle formation. Formation very close to all-time high breakout. FIIs are increasing their stake. Potential gain of 75%. Okay, so our target entry price will be 1250. Our target is coming out to, let's see what this price is, 2200, so 2200 rupees. So the potential gain is 76%. The loss is 1097. Potential loss will be a close to 12% here, and the status is obviously waiting for entry. All right, so let's see what happens. Okay, this is strange. I don't know why this is not working. Something's gone wrong in the formula of my sheet, so I'll have to fix this later on. Anyways, let's carry on. Okay, all right, next we have Escorts. So Escorts, unlike other auto sector stocks, has not corrected, but the reason behind it is that there's some corporate development happening over here. I think some Japanese company wants to invest, wants to increase their stake in this stock, which is why the price is consolidating in a very tight range. So obviously, this sort of information only insiders would have beforehand. So we can't take the risk because there's a very high chance this could correct very deeply, like how other auto sector stocks have done. But if those corporate developments pan out and insiders have that information already, then the price could potentially go up, go down. We don't know. So at this point, it's not worth taking the risk. Moving on to Tandla. Tandla is correcting with all the other IT stocks. And there is no strong base also, right? Because this price has just moved up in one direction the moment it go breakout about 1,000 rupees. So you could potentially see a correction up till 1,000 rupees from its all-time high. So right now it's better to stay away from the stock. ICICI Security is also correcting uh, like every other stock. So this is also related to the financial services. And as we have seen, banks, financial services are not really doing well. Also, it seems to have broken this support trend line. Ideally, it should have taken support over here, but this was decisively broken in Jan, and since then it's just correcting. It could potentially take a support somewhere around this price. Uh, that would make it a good buying price for a potential reversal trade. But as of now, there is no bullishness whatsoever. Aditya Birla Fashion. Um, The chart is looking okay. It's not looking that bad. Let me look at it in line chart. Just one minute. I want to confirm something. Okay, so the line chart is not indicating that it made a double bottom. So that, sorry, a double top. So that's good. This close is higher than this close. So that is a good sign. If we switch back to candles, right now this price should act as a support, this entire zone. If it stays above this, then it's a very good thing because this stock has also been running up massively since its COVID fall. And right now, all textile companies are doing pretty well. And it has broken out of its all time high, of its pre COVID high. And it's currently, you could say, retesting the breakout zone. So you could potentially see a good gain in this stock. Let me quickly just look at some trade ideas to understand what potential targets we can potentially get. And we want to look at trade ideas where we can get some long-term targets. I'm not interested in looking at short-term trade ideas here. Okay. So let's see what this gentleman has put over here. So this gentleman has has found a cup with handle. The cup with handle breakout did happen if I'm not wrong. Let me see. Let's switch over the daily chart here. What date did he identify this? This is February 2nd, Feb 2022. Okay. So there's the cup, there's the handle. So that has broken down for sure. Mm, yeah, I'm not able to find any good trading idea here. So I'll have to do some more research on this chart. But if we use the method that I generally use, which is the very simple method, we just take this bottom till the top, put it up above the breakout price, and the potential target that you can get is 392 rupees, so close to 400. So let's switch back to the weekly chart here. This from the current price will be a gain of 50%. Okay, let's do one thing. I'm looking at the daily chart right now. Let's put up the 200-day moving average. So the price is currently above the 200-day moving average, and it is also at a very strong support zone. This could potentially be a good buying opportunity right now, and the stop loss also would be pretty tight in this case. So in my opinion, a good stop loss would be, I would like to keep it a little lower than the current than the zone, just to avoid stop loss hunting. So I would keep it at this price here, somewhere about 235. So let me add this to my tracker because this chart is looking very interesting. ABFRL. The current price is 264.35. Sorry, 264.35. Let's do one quick fundamental check once. ABFRL. All right, let's look at this. Aditya, Billah, fashion and retail. Okay, ROC is negative. ROE is negative. Has high debt. Okay, those are not good things. Okay, let's look at the quarterly results. Those look okay. December was a very good month, highest ever sales, and close to highest ever net profit. That is good. Margins are also stable. All right, yeah, the sales numbers are really good. The net profit could have been better, but since the last 2 years it's been making a loss. But I guess this is the pandemic issue. That's why there's a loss here. Because before that, it was making profits consistently for 3 years, and then the pandemic came, and obviously sales would have gone down. So that's okay. If you look at the borrowings, encouraging sign is that borrowings have came down last year compared to 2020. That was good. Let's look at the shareholding pattern, and we can see that FIIs have bought a large stake in March in the first quarter of last year in 2021, and since then it's been pretty much stable. Domestic institutions have reduced their position a little bit, but have been stable since the last 3 quarters. The public holding has reduced. That is a good sign. And let's see what else can we see here. In the public, there is no large public shareholder. And it looks like the promoters have sold some of their holding maybe to FIIs. So let's see who these FIIs are. Okay, this is interesting. Flipkart Investments Private Limited has bought a stake. Okay, this could potentially be a big deal. Flipkart investing here could be a big boost for ABFRL as a business. And there's some VC fund also over here which has added 1% position last year. This is a good stock. This is a good stock. I think the fundamentals will improve further on in the future. So let's see. So what are our observations? Let's see. Let's look at the weekly chart, and clearly what we can see is, let me remove these moving averages, that it has broken out of its all-time high of 262, breakout from all-time high of 262, retesting the breakout zone. Okay, Flipkart has picked up 7% stake in the company, which is a good sign. Okay, so now how do we enter and exit the stock? Let's go over. Okay, this is the tricky part, because I don't want to take too much risk and enter now, but I also feel like that if this retest is successful and it bounces from here, then I would miss out on like a good buying opportunity. But this is not the time to take experiments in the market. I think we should stick to our tried and tested method. of entering in the stock, and I will only enter this chart if there is a weekly close above this zone. So if it gives me a good weekly close above this price, then that will be my entry point. Now, what would be the stop loss? I'm not sure at this point because I need to see how this breakout happens, and depending on what candles are formed at the bottom, that's when I would be able to decide my stop loss for this trade. So let me add this to my tracker, and the target entry price is 283. So 283 rupees. The potential target is 393. Potential gain will be 38%. Stop loss we are not deciding right now. We're going to wait for entry, and that is the current market price. All right. Okay, I think we are out of time. I think we might have exceeded 1 hour, if I'm not wrong. So if you have been watching the video till the very end, thank you again for watching. Please keep positions light. Market's really tough right now. I've been booking losses wherever I need to, and a lot of my portfolio is in the red. So I know what you guys might be feeling right now, but stay disciplined, maintain tight stop losses. Uh, War is something that the market has seen already in the past, so it's not something new like the COVID pandemic, which was not seen previously. So let's continue investing in the market, and keep maintaining your discipline, and everything should be fine. So again, thank you for watching, and goodbye.